Welcome back. Well, as promised, Supreme Industries, which just reported its Q2 earnings. Remember, the company's net profit has declined 15% on a year-on-year basis, while its revenue too has declined. MP Taparia, the Managing Director of Supreme Industries, joins us now. Good afternoon, Mr. Taparia. Thank you so much for joining us. Anyway, we are looking at it. Q2 appears to have been quite a subdued quarter, and also there appears to be a guidance cut that you've taken as far as the full year volumes are concerned. Please take us through, what are the challenges you faced in the quarter gone by?
Challenges to our mind, they are all now behind. In the second quarter, the prices went up in the beginning of the month in PVC. Actually, our main raw material prices went up by 19%, and then by mid-August, it went down by 17%. That happened due to the Red Sea shipping blockage. There was very poor productivity of container movement, and the country depends on 66% on imported PVC, and out of 66%, 80% comes from Asian countries. The freight went up by even $160 per ton. So the local maker and everybody, the prices went up so cheaply for a short time, and then when the freight rate started coming down, the rates have gone down by 17.5%, I told. Secondly, government also reduced their infrastructure spending in first half of this year. Monsoon also was extended in the month of September, and that cumulative effect was that we had 0% volume growth, and because there was huge destocking throughout the value chain of plastic piping system. Now that huge destocking which took place, now they required restocking again. Now things are stable. The infrastructure spending also improved. The pricing of the raw material are at a low level, and we maintain they may either remain the same level or may slightly go up. So we anticipate good business coming in the remaining second half of this year. So overall, that's why we are required to reduce our guidance, which we gave earlier, 25%, that this year we may grow between 16 to 18% in plastic piping division and 14 to 15% overall company.
Okay. 14 to 15% overall growth is what you're expecting for the company, and in the plastic piping business, it'll be around 16 to 18%. That's the revised volume growth. Mr. Taparia, you spoke about how freight rates impacted the business in first half. While other things have improved, maybe the infra spending by the government has improved, monsoons normalized. Are you seeing improvement in freight rates as well? Because that continues to be an issue. How much of your export, how much does export contribute to revenues?
Our export is very minimal. We export below 3% of our turnover.
Okay, so is it the imports which is being impacted because of freight rates?
Import was affected because country on PVC raw material, country depend on country depend on 66% import, because country consumes 4.5 million ton, 1.4 million ton local production, 3.1 million ton imported. And out of that import, more than 80% come from Asian countries. And Asian countries, the container produce was so low, the freight has gone up from $30 to $200 per ton.
Okay. Mr. Taparia, a two-part question. Q1, volume growth of 17%. Q2, volume growth has stayed flat. Now, even with the revised guidance, Q3 and Q4 actually are asking for quite an implied steep ask rate as far as, year-on-year growth is concerned. So will you be able to meet that? Are you seeing enough demand on ground? And the second question is, earlier you had given an EBITDA margin guidance in the range of 15 to 15.5%. With rising input costs, will you be able to meet that particular margin guidance?
No, first I talk to you about the volume growth potential. Normally, second half, every year grows much better than first half. First half, the month of July, August, September, demand remained weak due to monsoon. Second half, after crops are harvested and the business season is fully in swing, so business always remains better than compared to first half. This year, the added factor will be that a huge destocking took place. which will give bigger boost in the second half compared to first half. So we are very confident that whatever volume growth we have planned, we will achieve without any trouble. We have got capacity in place, and the raw material position also we are very well covered, so there is no issue. On the operating margin, we aim that we will earn this year also between 14.5% to 15.25%.
Okay.
And overall trend also
14.5%. Yes, sir, go ahead.
to 15.25%.
Okay. 14.5 to 15.5% is the margin guidance that you have for FY25. Mr. Taparia, last question before we let you go. What is the kind of capex that you have planned? Now, it's not only plastic piping business, you have forayed into different segments as well. Is the peak capex over? Will you be putting in more in terms of capex? And what are the plans of funding it as well?
We had a plan to have a commitment, including carry forward commitment of 1,500 crore this year. Our Capex plan is going very smoothly. In the current year, we are going to make cash payment of around 1,000 crore. In first half, we already paid 427 crore, and the Capex plan is all going to be met by our internal accrual. No debt. We got our own money in our account, and we'll be taking care of all Capex plan from our own resources.
Mr. Taparia, thank you so much for joining us. So quickly after declaring the results, we wish you all the best for a much better second half of the year. Moving on, a small programming note as we slip into a break. As we prepare to ring in the festivities this Diwali, tune into CNBC-TV18 at 3 p.m. on the 29th of October to hear out the biggest of market voices giving their tips on how you can make your portfolio prosper this Diwali.